dropping to 5.8%. The expectation was that it was increasing to 6.0%. Dollar Canada was dropping 1%, almost 1% on Friday on this news, but otherwise it's been relatively quiet. German industrial production was out slightly lower than expected on Friday, and then we saw some Aussie numbers. We saw the home loans out basically flat versus an expectation of a drop of 1%. Investment lending was out as minus 3% versus minus 2% prior reading. And that's about it. We didn't really have that much out on Friday. Eurodollar is forming a triple top formation and looks attractive to the upside after the G7 meeting. We saw some the Aussie is going stronger, the Australian dollar is going stronger on rate expectations apparently, but no real reactions to the G7 meeting, except we saw the euro going slightly higher. Expectations going into the G7 meeting were quite bearish for the euro, and a lot of speculations about the euro breaking key support around 143.50 versus the US dollar. Stocks down for the first time in 3 weeks as financials and home builders are plunging. This is on a weekly basis. The S&P 500 lost 4.6% last week, and Aussie stocks and Hang Seng down on growth concerns. Nikkei is closed today due to National Foundation Day. Fixed income treasury is little changed, still range bound. Not really seeing any much movement here ahead of and after the G7 meetings, where you would have expected something to happen. Commodities, wheat is rising record levels, limit up again for the 6th day in a row to a 60-year low inventories. These very low inventories have led to a lot of speculations about higher wheat prices. And we are seeing gold and silver picking up nicely with the euro as well, and on continued dollar weakness speculations. It was looking until very few days ago as if the uptrend in silver and gold were in danger of breaking down, and we were at risk of a major sell-off in both. But now it actually looks like we'll see a test of the previous highs and eventually also a break. So what's going on in the markets? We have the G7 meeting over the weekend, and they were stating that they would be ready to with appropriate actions individually and collectively, and that would mean rate cuts, tax cuts, and perhaps some other actions we don't know of. But this is generally a surprise also to see that there was no real mentioning of the weak US dollar. Actually, the US US officials were mentioning that the strong dollar policy is still in place, and that makes you wonder what a weak dollar policy would look like. So that's a positive for the euro dollar. Also, that Trichet was not indicating that he would be cutting rates anytime soon. He was actually neutral on rates, and expectations for the G7 meeting were quite dovish going into the meeting. So that's another positive for the euro. That's also why we're seeing euro dollar going higher after the weekend. Then we saw Deutsche Bank CEO Joseph Ackermann comments that the rating downgrades for bond insurers might pose a new tsunami-like danger of the financial markets. And that has added fears that the second chapter of the turmoil following the subprime crisis is yet to unfold in the marketplace. Also, it's quite interesting to see that Deutsche Bank is out with this comment, as they're the ones that have been actually speculating the right way in the subprime markets. They've been short on all this and making money on it, and so they know who their counterparties are and have been historically, and it looks like they're saying that the insurance companies are the ones that will basically be hurt the most by the next wave in this whole credit turmoil and the subprime and all this the stuff that's going on in the credit markets. Thin holiday markets in Asia as Japan is closed, well, we didn't really see much action. And then we have a story out on Société Générale. To show up capital, they have been selling stock, and the fact that they did that without any direct investments, it's an indication that again this is yet another tightening of the conditions for financing in the financial sector, and that could also be an initial worry going forward. And especially you would have to keep an eye on the subprime insurers, whether they will be downgraded or not. That will be very important for markets going forward. The economic calendar today, we have the UK trade balance figures out at 9:30 GMT, and then we have the new house price index in Canada expected to come out at 0.3% month on month. But that's basically it, except perhaps the Norwegian figures at 9 o'clock GMT. We have the CPI out expected at minus 0.4%, and year-on-year at 2.1%. In the next couple of days, we have the ZEW figures tomorrow in Germany. We have the EBD tip, economic optimism, in the US, ABC consumer confidence as well, and DOE short-term crude outlook. In New Zealand, we have the producer prices and producer prices output and input. On Wednesday, RICS house price balance. And also on Wednesday, the Riksbank interest rate decision, as well as the Bank of England inflation report. And Tricia is out speaking in Frankfurt. Also on Wednesday, we have the advanced retail sales in the US. Those will probably be the figures of the week to offer guidance for stocks and perhaps also for the rate outlook. If the retail sales are really dropping, that will be very, very important to see. One FX trade today is Euro NOK. We expect to see continued downside after quite bearish price action in the past 2 days. Support is around 8 and resistance at 8.03. A lot of focus on commodity currencies as oil and metals rally despite global growth pessimism, and Euro NOK may have some downside if it breaks support. So we sell a break towards the break of support around 8. And for a target at 7.92 and a stop at 8.0350. On equities, we would be selling Burberry's, which is a luxury producer. It's below its it's a downtrending. It's a lot of stocks, but we especially like this downtrend, and also the fact that it's a luxury producer. We should see a lot of speculation that these kind of companies should not be doing well in the next year or two. So sell in range around 425 to 415, and targets 370, which is the previous low, or around the previous lows, keeping a stop loss above 441. That is it for today, and thank you for joining me here on Saxo Bank Market Call.